Usually, dividend stocks are companies for which their best time of growth is already in the past. If the company is investing in its growth, it is not paying out cash as a dividend. I am not a typical dividend investor. I am investing in innovative companies mainly. But you can find innovative companies which pay dividends too. And there are a few dividend growth stocks in my portfolio. In this video, I will talk about two companies which are worth looking at in more detail. These are the best dividend stocks to buy in November 2020. I will also tell you about my investment in these dividend growth stocks. Before we get started, smash the subscribe button. This channel is about money and wise investing, and I know it is gonna help you learn a ton and make better investment decisions. So make sure to subscribe and hit the notification bell for new videos. Apple is a technology stock. I'm afraid I have to disagree with the view that it is just an iPhone company. The company is continuously evolving. At first, Apple was known for selling Mac computers. Then the majority of sales were from Macs and iPods. Later, the revenue segment breakdown was dominated by iPhone and Mac. The next phase can be attributed to diversification between iPhone, Macs and iPads. And currently, the focus is on iPhone and services. What you can see is that the company still redesigns itself and is not afraid to kill some obsolete products with new ideas. The example of it includes the introduction of the iPhone, which killed the iPod. But let's come back to services, which are more and more critical to the future of Apple. With new subscription services revenue is expected to grow quickly. Apple has released bundles of its subscription services called Apple One. The bundles vary by region but include Apple Music, iCloud storage and Apple TV Plus streaming video, among other subscription services. And if you like saving money by buying bundle offers, smash the like button for the YouTube algorithm. It will help this channel to grow and you will get this like from me. In the third quarter of 2020, services revenue rose 16% year over year. The sales in this category went up to $14.5 billion. This category includes revenue from App Store, Apple Care, cloud services, music and Apple Pay. The growth of this segment is so important for investors because the profit margin is high. It was 67% in the last quarter. For comparison, the gross margin from sales of products is on the 30% level. So to give you an even better reason for the focus on this segment, services business accounts for 22% of revenue, but it generated almost 40% of Apple's gross profit in the latest quarter. Do you see now why sales of devices are getting less relevant? So what else? We can expect that the growth of this segment will continue. Just a year ago, Apple released Apple News Plus, Apple Card, Apple Arcade and Apple TV Plus. Just a quick question, have you used Apple TV Plus? The free one-year subscription comes with the purchase of a new iPhone, iPad, Apple TV or Mac computer. I have tried it. I watched two series and I consider them to be very good. One is C and the second is The Morning Show. Let me know in the comment section what original show or movie from Apple TV Plus do you like the most. This year, Apple also announced a new service called Apple Fitness Plus, which is a Peloton-like fitness subscription. But the more critical announcement this year was the Apple One. Apple One provides excellent value if you're already a subscriber to one or two of the included services. Each of the individual services on offer, Apple News Plus, Apple TV Plus, Apple Music, etc., each costs $9.99 per month for a subscription. So as you can see, Apple is extending its service offering, which will make people stick more to the Apple products as well. This autumn, Apple held 3 product launch events. First was in September and the focus was on new iPads, new Apple Watches and subscription services, Apple Fitness Plus and Apple One subscription service bundle. Next event was in October and Apple announced their new iPhone lineup and HomePod mini smart speaker. 5G is coming to the entire lineup of new iPhone models. It means that there is a potential for the super cycle in terms of replacement of old iPhones. According to a survey on iPhone users, some 78% of respondents are interested in buying one of the new iPhone models versus 68% last year. Battery life and 5G capabilities were tied for the most popular reason to upgrade, which seems to validate Apple's massive 5G marketing push. Finally, the third Apple event was held in November. Apple announced the new MacBook Air, MacBook Pro, and Mac Mini models, all of which are equipped with the first Apple Silicon chip, the M1. M1 is the company's first commercially available ARM processor for Mac. Apple's new chip allows it to boost performance significantly, but also extends battery life. In the Apple new MacBook Air, the processor helps provide battery life that's good for up to 15 hours of web browsing and 18 hours of video. It all means that Intel is in trouble. Just look at how quickly Apple was able to improve the performance of their chips for smartphones versus the pace of performance growth for Intel processors. This power efficiency was the key to implementation in smartphones. Thanks to that, it can now be moved to MacBooks too. Such an increase in performance and power efficiency is the effect of not looking at the competitors. Apple, similarly like Tesla, looks to improve their products in comparison with their last year offering. Competitors look at them. Apple and Tesla look to the future. Focusing on what customers want is a better idea than following the competition. This ranking of the best processors in smartphones shows you that Apple is competing with itself only. In terms of battery performance, look at the iconic Hodgman as the PC guy attempts to justify his louder operation and inferior battery life as a PC compared to the new fanless MacBook Air with up to 18 hours of battery life.
Stop. Hang on. Wait. One more thing. Hi. I'm a PC. Is there time for questions? Good, because I have one. Why? Why make all these advancements? What's the point? Right? Oh, you're so quiet now. Look, I'm a machine. I'm proud of it. That's my fan. Longer battery life. Plug it in. Where are you going? Just plug it in. Fast. I'm fast. I'm still fast. Check it out. Still got it. PC. Still got it. I've always been there. I always will be. Fast. Okay. My battery's drained. I gotta go plug in. Good luck. Woo! Outlet!
New product offering and potential for an iPhone supercycle can be great news for Apple shareholders. 3 product launches this autumn are setting the scene for really strong holiday sales and likely a big first calendar quarter of 2021. Apple is a perfect company to hold if you are a dividend investor. It is a growth company too, which is still evolving and making its position stronger. It should not surprise you that the company is the most significant position in Berkshire Hathaway portfolio, which is a holding company of Warren Buffett. Playway is a producer and publisher of video games. It has over 60 subsidiaries and over 150 games in production. Such diversification in production reduces the risk of the game not being a success. Playway Group specializes in simulators, city builders, but also other types of games. The most profitable productions are House Flipper and Car Mechanic Simulator. Playway is helping small video game development studios in the whole process of game production. It helps in working on the concept, development, marketing, and publishing. Every year, several gaming studios join the Playway Group. So that is what Playway is doing. Is it the right field to be in? It seems that it is. The gaming market is still growing and is expected to grow around 8% annually. Let's have a look at the earnings for the second quarter. Sales of Playway in the second quarter of 2020 were 102% higher than 1 year ago. Net income went up to 128 million zlotys, but a big part of it was the result of booking a one-off gain on the loss of control of subsidiary companies, Games Operator and Pyramid Games. According to the second quarter report, there are 11 games of Playway Group in top 100 wishlist on Steam. The sales and income are continually growing. The current net income gives the company a price-to-earnings ratio of only 16, but bear in mind that the net income in the second quarter is increased with this one-time revaluation of subsidiaries companies. Without this one-time event, price-to-earnings ratio is around 20, which is still cheap for a company with a growth of sales of over 80% in the last year. Of course, the lockdown of the economy was a favorable factor for selling games. But there is the important bit. It might be surprising, but Playway pays dividends. It is rather uncommon for companies with such high growth. Just look at this increase in revenue. Both Apple and Playway are significant positions in my stock portfolio. I hold shares of Playway since August 2018, and I have been increasing my position many times since my original purchase. You can see that on this chart. I reduced my ownership in Playway slightly before the crash in March this year, but as you can see, I bought much more on the lower level. Playway stock went up by almost 80% in 2019 and over 130% this year so far. Apple stock went up by 89% in 2019 and over 60% this year. So we can see that their 2 or 3% dividend is only a fraction of what you get as an investor. I prefer to focus on such companies which reinvest a significant portion of their profits for future growth like Apple or Playway do. For such companies, a dividend is only an additional reason to buy their shares. But if you like to see regular cash payments to your account, such growth companies, which additionally pay regular dividends, might be the right choice for you. You are awesome that you watched this video till the end. For more videos related to finance and investing, hit the subscribe button. I have something extra for you. If you want to take your financial future in your hands, I compiled a list of 14 disruptive companies which are worth looking at in more detail. Identifying the main trends is where you can make significant profits. I analyzed 4 trends which might allow you to make good returns from the transformation of the economy. I also gave you examples of companies benefiting from these trends. I can see a significant probability of at least doubling the market capitalization of these companies in 3 to 5 years. I shared with you my choices for best dividend stocks to buy in November 2020. But remember not to listen to bloggers and vloggers. Always do your research and have conviction why you buy shares of the specific company. Let me know in the comment section what dividend-paying companies you have in your portfolio. I respond to every comment. If you enjoyed this video, make sure to subscribe and click the bell to receive a notification about a new video being published. Thank you so much for watching, and until next time, happy investing!